I think taxes are extremely exciting. Got off a phone call yesterday. We got them down to 1.02% tax bracket from 37. So yeah, 36%, pretty exciting to me. You can do those things. Those can be legal, but you have to do them right.
Yeah.
It's not following a 30-second TikTok video on how you're going to write off
Right.
$1 million yacht. You cannot have an S corp and pay yourself $1
Yeah.
and have everything else be it. It's not going to fly with the IRS. Good luck. Okay,
Yeah.
that will cause audits.
Hello, welcome back.
Hello. Nice to be here.
Yes.
Super excited to be here. I get to be with two lovely ladies. How can I not be excited?
I know. We're so excited to have you back, Shauna. So thanks for joining us, and welcome back, everybody, to another episode of Living Richly with Curo. This is episode 83. And my name is Ann McCabe. I am the CEO and a partner here at Curo Private Wealth. And I'm joined, as always, by my lovely partner, Atricia.
Hello. I am Atricia Roberts, COO and partner here at Curo. Thanks for coming back. If you've been here before, thanks for checking us out for the first time to all our new listeners.
Yes, we love and appreciate you all. And if this is your first time listening to the podcast, our mission on the podcast, as well as what we do each and every day with our clients in our actual firm, is to educate, inspire, and empower you on your financial journeys. And we are super excited to have the one and only tax goddess, Shauna, back on the podcast. She joined us for episode 45. So if you did not listen to that, make sure after you listen to this one, of course, make sure to go back to episode 45 because we talked all about what is a tax strategist, what are some of her top tips. So today, in light of that one big, beautiful bill, which we call OBBBA for short, because who has the time to say that every time? Nobody. So in light of OBBBA passing officially in July, we wanted to have Shauna back on, just catch up, see what is going on in the world of tax goddessness and tax strategy. So welcome back, Shauna.
Thank you so much for having me. I get to nerd out with fabulous people that also love to nerd out. So I'm super excited.
Yes.
We are guilty of nerding out. So you're in good company.
But you have such a good way of making taxes almost seem exciting. Like, oh, this isn't that boring.
I mean, I'll tell you what, the benefits of the timeline here, right? So we've been on phone calls, meetings, whatever. I think taxes are extremely exciting because if I can get you down, got off a phone call yesterday, we got them down to 1.02% tax bracket from 37. So yeah, 36%, pretty exciting to me. I mean,
It is exciting. Saving
Yes.
money is exciting.
Yes, always exciting.
Exactly.
Yeah, exactly. All right, awesome. So let's kick off, Shauna, with how's life? How's life been since that one big, beautiful bill was passed? What's new and exciting in your world?
I love it. Well, so the goods and the bads, as usual, right? Clients don't really see that. They go, yeah. Some tax laws passed. I guess we'll figure that out. I don't know, whatever. And of course, December 1st, they go, oh, well, maybe I should do something about that. I'm like, yeah, the things we've been emailing you for 6 months, minor things, right? So, as usual, everybody waits until the last minute. So what do you do, right? What are the big important things? One of the biggest things, and especially if you're charitable, right? And this one kind of I feel like slid under and not a lot of people really caught it. But if you're charitable in 2026, there is now a new 0.5% floor on all gifting. So whatever your AGI is times 0.5%, that is not going to be deductible for you. So people that are doing minor gifts, your Goodwill donations and, the $20 to the charity on the corner, that kind of thing, those just won't even need deductible anymore at all in 2026. And for those with much larger donations that are doing, CLATs, CRATs, CRUTs, some of these really big charitable contributions, if your AGI is pretty high, that's going to take a chunk of your savings out there too, right? Now, on top of all of that, if you're in that 37% bracket, we're trying to get you down to the 1%, your deductions won't even be allowed to be deducted at 37%. The max rate on those deductions is 35%. So we're actually seeing quite a big kick up in the charitable world here right near the end of 2025 going, like if you're going to donate, right? Create a donor advised fund, bunch all of your donations. If you have the cash to do that, if you have the appreciated stock to do that, now's the time to do it and get those donations into your charitable Schedule A, itemized deductions, however you're going to do it in 2025. So at least you're getting the full benefit for whatever it is you're going to offer. So,
Yeah. Yeah, absolutely. We've been talking to clients about that as well and trying to educate on these too. Yeah, as you said, like things that sort of slipped under the radar a little bit until we noticed them and we were like, wait a minute, this is,
ding ding.
yeah,
Yeah.
yeah,
This
this
can
is,
be big dollars if you're
yeah.
charitable minded.
Hmm.
I think a lot of promotion was kept on the new SALT limit, right?
Yep.
The
Right.
$40,000 SALT limit. But of course, the piece that they were not promoting, you got to love our government on the media, not the media. And what are we saying, right? The piece that was not promoted is that if your AGI is over 500,000, you don't get the $40,000 limit,
Yep.
right? You
You're back
start
down to 10.
you back down to 10, right? And so, I'm smiling because the types of clients that are generally using tax strategy are going to be in those higher limits. But if your CPA and if your strategist don't tell you, hey, we've got to get your income to 4,999,999, right? Like you're gonna miss out. Now, of course, we still have the PTET, the pass through entity tax. So if you have a business, a flow through, a partnership, or an S corp, you can have the business pay that tax on your behalf. So that does help. But it's one of those things where you got to plan, right? Heaven forbid your number finally comes in and you're at 500,001. I mean, it's heartbreaking, right? But then we're looking at, of course, the estate exemption. Big push that this one was triggers for me because, of course, he's now the publicity is saying it's permanent. Nothing is permanent
Nothing is
in the tax
permanent.
code.
That's what
Nothing.
we say that
Yeah,
all
we've
the
been
time.
reiterating that.
Nothing's permanent. It's permanent as long as the president and the Congress and the Senate are all the same thing, and that's how long it's permanent, right? Which never happens. So, we are, of course, instructing clients. We don't know if that 15 because they've been pushing to get it back down to 1, 2, 5, per person for many, many years, right? So hopefully, but do you really want to hinge your entire tax strategy on hope? Hope is not a strategy, right? So start looking into creating family limited partnerships. Make sure that you're doing your annual gifting, right? We're now up to $19,000 a year on the annual gifting, right? If you are charitable, go look at those Pratts, Platts, Cruds, all the CXXT vehicles where you're getting these huge donation abilities into. But yeah, estate planning is still as important as it ever has been on the personal side. So if you're anywhere near that 15 million, we like to see people start with your basic revocable trust when your net worth is 250,000, not 15 million. So if you're already in the 5, 10, 15, and you have not done at least some structuring, you're way behind the ball for sure.
Right. Well, you've already mentioned some really good tips around some charitable strategies, some estate planning strategies. Are there any other strategies you're seeing post OBBA that our clients and listeners should maybe consider or be aware of?
Well, I will give you one to be aware of,
Okay.
and in a bad way. So, like be
We'll
warned,
take
kind of
those
be
too.
aware of what I've seen, especially this year, and it came out after OBBA, and it's because OBBA put back in the 100% depreciation on the business side. Okay, so one of the strategies that has come up is people buying an asset at a massively discounted rate. So, just to give an example, okay, you buy these children's books for $150,000, okay, and then you turn around and you make them a charitable donation for 750. Okay. Now, these partnerships are being created, and this is a very basic example because I'm seeing it in the fire safety industry. I'm seeing it in children's books. I'm seeing it in land deals. I'm seeing all sorts of these where you're getting this 5 to 1. Give us $100,000 investment in the partnership, and we'll get you a $500,000 donation contribution. Um, the
That sounds
IRS has been
very shady.
It's very shady. It's super shady. I think the most important question for the listeners is if you get approached by one of these things, they're not all bad. Like, I'll be very clear. There's good ones and there's bad ones, and there always is. Okay. What you are looking for and the questions you want to be looking for, does this strategy have a PLR, private letter ruling, right? Like, has this been approved by the IRS? Because if it has that, do it, go for it, you're fine. Okay. Assuming the PLR is real. I've seen a couple fake ones too. Danger. Oh, yeah, people fake all the things, right? I mean, so yeah, double check the PLR is real. And if it doesn't have a PLR, it has a tax opinion. Make sure you're getting that tax opinion in writing and that you're having your team do the due diligence on that tax opinion. Because I've also seen tax opinions from tax attorneys. One of the ones, this children's book thing that came across my desk, tax attorney has previously been indicted for not following the proper documentation on how to do tax strategy. And I'm like, nope. Right. So make sure you're doing your due diligence on some of these things. Okay. And we're just seeing a lot more of these things come up. One, because of the charity thing, right? Like, get all your charity now, that's kind of the big push. And the second one is because of the 100% depreciation deduction, where you're starting to see solar and equipment. Like, I saw one that was you buy the computer servers for Amazon, and that gives you a business in a box. Mm, red flag. Okay, business in a box. And you're going to get 100% of the depreciation, and you never have to repay anything. And I'm like, if it sounds too good to
Too
be
good to be
true,
true. It
Right, it
is.
probably is.
right? So
Yeah.
just be cautious. We're seeing a lot of these come up, and the sales guys are good. They're really good. Go around questions. So just you know make sure you're
Yeah.
having your team that you know and you trust, the lovely ladies here, Anne and Atricia, right? That they are looking at your documents and actually making sure that it's an above board strategy. So,
Are you seeing these things, Shauna? Like you mentioned some coming across your desk, but where else are you seeing these? Like Reddit or like what are we talking? Where are these things
oh, I
showing
mean,
up?
the marketers are everywhere. I mean, the
Hmm.
IRS actually has a name for them. They're called promoters. You do not want the
Mm.
name promoter tied to you. Okay. It's not the IRS. That's not a nice name from the IRS. Let's put it that way. But yeah, I mean, we've seen it in TikTok videos, YouTube videos. We've seen it from financial advisors who look at it on a face level, but they're not specialists in that area. So they don't necessarily know you need to be asking about step transaction doctrine, and you need to be looking for the PLR. That's side note. That's why a lot of people have a strategist, is purely and simply to run things by, right? Is like, is this sniff test? Are we good? What's going on? So yeah, I mean, it's everywhere. And I always call them, please forgive anybody who's a finance bro, right? We've seen the finance bro of like, here's how you write off your yacht, here's how you write off your Rolex. You can do those things, those can be legal, but you have to do them right. It's not following a 30-second TikTok video on how you're going to write off $1 million yacht. Like, there's strategies and teams and documentation and all this kind of stuff that goes into something like that. So
Yeah,
yeah,
for sure. So switching gears to talk a little bit about businesses,
of course.
have you all been making any recommendations to tweaking of business structures? So like from, S Corp or C Corp standpoint, or any changes to ownership structures, compensation structures, anything like that?
Yes, but not necessarily with relation to the OBBA, right? From that standpoint. The things that you're hitting on have been very specifically targeted by the IRS over the past 10 years. So, for example, you mentioned compensation, right? You cannot have an S corp and pay yourself $1 and then have everything else be a distribute. Like, it's not going to fly with the IRS. Good luck. Okay, that will cause audits. We have seen when the C corporation tax rate went down to 21%. We've seen some people converting from S Corp to C Corp or from partnership to C Corp. But more often, we're actually seeing the splitting of entities. So we'll see a company that maybe has 2 or 3 different revenue streams, and we'll see one split off to a C Corp that has a fiscal year with an accrual base. And we'll see another one that is an S Corp with a calendar year with a cash base, because that combination will allow you to move money totally legal, totally above board, between the two entities to really be able to play with the tax rates.
Mm.
So,
And timing differences too, right?
of
Between
course,
the,
yeah, if you have one entity that stops in June and the other
Mhm.
one's December, now you have 6 months to do whatever you need to do, which is fabulous. We are seeing there was quite a shift. The OBBA, as you call it, the OBBA did have a very large shift in research and development. So for manufacturing companies, for AI companies, for tech companies, even companies that are not in your standard research and development, but for example, accounting firms bringing on AI and bringing on automations into the accounting process is research and development. That qualifies for research and development. So we're actually seeing quite a lot of firms, well, businesses in general, looking at the new research and development rules because basically anything paid after December 31st, 2024, or up through December 31st, 2024, small taxpayers. So small, IRS definition of small is your average receipts is less than 31 million for the last 3 years. Instead of capitalizing all those research and development costs, you're allowed to just write them off. So we're seeing massive amended returns, hundreds of thousands of dollars of research and development. We had one case, it was $2 million of research and development that became an expense that was previously capitalized and depreciated. So
Wow.
yeah,
Mhm.
that's a big thing. That's a
Mhm.
huge piece of the change in the OBA. So
Yeah. I hear your security team in the background.
yes, I
Your
apologize.
security tax deductions.
I'll tell you what, the benefits of having 2 German Shepherds, a Cane Corso Great Dane, and 2 larger sized mutts that look very ferocious. They make an excellent security team.
I
So
know.
yeah.
I know. Go back to episode 45 to hear more about
Right.
that,
If you
y'all.
want, yeah. If
If you
you
want
know,
more
you know.
details. If you know, you know.
All right. So we'll change gears again a little bit. And we like to, of course, let our listeners, our clients, viewers know places where they may also make some missteps, right? So, what are some of the biggest missteps you see? Maybe when people focus too narrowly on trying to save taxes. Now, again, I know you are the queen of reducing the marginal rate,
Gotta love it.
but have you ever noticed any missteps when your clients focus too much on trying to save on taxes versus paying attention to maybe future implications around that?
I was going to say 100%, 1,000% when you talk about future complications. So
Mhm.
yes, you're right. People hire me when they want to look poor. That's my entire job, right? Is help you
Right.
look poor. The problem with looking poor is that no bank will lend to you. You can't buy homes, you can't buy cars, there's no financing, right? So when we look at tax strategy, you want to be looking at how do I keep cash and look poor? Because if you're going to look poor, you are your bank. 100%. So, do you have an infinite banking life insurance as a retirement plan vehicle that is a bank for you? Great. Maybe you don't need for outside funding, right? Do you have an 831B captive insurance program where that could be a bank for you, right? Because if everything goes to hell in a handbasket, which I know we're all kind of sitting around like the market's doing all sorts of weird stuff. Like, are we crashing? Are we not? What are we doing? Like, nobody has any idea what we're doing. Cash is king. It always has been, always will be, right? So, when we look at tax strategy, we highly recommend that people start with the things that don't cost money, right? Like, I mean, $100 to set up an account, fine, right? But we're not talking millions of dollars being poured into an oil and gas well that you won't see any returns for 5 to 7 years, right? So, uh, I think you hit the nail on the head there. People get so focused on getting to 10%, 5%, 1%. We can do that, but all of your cash may now be tied up in things that is bad for you, right? You may need working capital. You may need to invest in a new building. What if, heaven forbid, something breaks, right? Something goes wrong. Okay. And two, if all of your cash is the other one we see is in future taxable things. So if you're pouring money into a defined benefit plan, that's great. But if all of your money is in a defined benefit or cash balance or a traditional 401k and you have nothing that is tax free, so like your Roth, your life insurance, some of these other options, you have zero opportunity for your future self to do any tax planning. because you will have RMDs, required minimum distributions. You will pay whatever the then tax rate is. And it's, in my opinion, certainly not going down. Like I'll believe that when I see it, right? So having the ability to leave a little bit of flexibility, at least for your future self, is a good idea, right? So
Yeah, I'm so glad you mentioned that. We talk
Yeah.
so much all the time about, yes, we want to save as much money in taxes as possible today, but we also want to make sure that you have a diversified tax portfolio in the future. Everybody talks about diversification and investments, but we also want you to have multiple buckets that you can pull from,
Right.
because the other big
100%.
thing, in addition to RMDs, is IRMA, right? Medicare premiums that go up, and that's a cliff too. You're $1
Yeah.
over the IRMA limit, and all of a sudden your Medicare premiums are up by,
Doubles.
yeah.
Yeah.
And people hate that, right? Because nobody likes paying more for their Medicare.
Yeah,
So
of
these are
course.
all things, yeah. So it's a balancing act of, yes, making sure you're saving money on taxes today, but thinking also about your future self.
And this is why, at least from my perspective, and I know it's true for you ladies as well, if you don't have a team in place, a
Right.
team of specialists, you are shooting yourself in the foot. Okay.
Yeah.
Because if you believe that TurboTax is going to give you the advice that a proper insurance planner, a proper financial planner, a proper tax strategist, a proper CPA, a proper attorney, if you think TurboTax is going to give you that, your head's in the sand.
Right.
It's not going to happen. You
Yeah.
have to have the team. And at least for us, we like to talk to the team, the whole team, sitting in a boardroom with digital or otherwise, at least once a quarter, because
Mhm.
stuff changes, right?
Mhm.
OBBAs show up in the middle of the year. And we're like, oh, okay, great. Like, here's now all the things we have to do and change. So,
Yeah.
yeah,
Yeah. And you don't, sometimes you just don't even know, you don't know what you don't know always,
Right.
for all of us. And you may think you're asking the right question, but a lot of times if you do use TurboTax or you Google something, what if you're not asking the right question? Or what if you're not asking the holistic question and you don't have a human on the other end to be like, okay, here's the answer to this question, but let's also think about this other point that you didn't specifically ask, right? But this, from our experience, this is also something that we need to be
they're
considering
going to
for you.
tie together. I mean,
Right.
earlier you were asking what's one of the biggest pitfalls. I love AI. It is not a replacement for a team.
Yes. Oh
Period.
my
Mm-mm.
And
gosh.
that's the reason why, because
Yep.
AI will answer the question you asked it. And even if you ask it, what other questions do I need to be considering? It doesn't have the experience. It's going to go look at 16
Open
CPAs
source.
websites, whatever. It's going to give you what it thinks you want. Um, at the moment, at least, we'll see in 5 years if our machine overlords take over or whatever, right? But yeah, at the moment, at a very minimum, it's still human. It's still the relationships. It's still the experience. So
Yeah,
Yeah.
exactly.
And
Yeah.
I think that's true at any asset level, really at any income level. I mean, I know if you're really young and then maybe there's only a W-2, then TurboTax fits. But I hear even so many young investors talk about, I don't know how to complete my W-4, right? I don't know what I should. And I'm like, well, are you working with a tax preparer or a CPA? Like they add
yeah,
value, right? Your team adds value in
yeah,
other ways, even if you don't think you have an overly complicated tax situation.
100%. Yeah, and
Yeah.
and this is it always comes back in my head, one of the very first state and trust attorneys that we worked with forever ago. And this was when I was a youngin', right? I'm not going to say my age, but a little bit younger than now. And I said, well, so when does somebody need a revocable trust? And he said, as soon as they've got $250,000 and or kids. And
Yeah.
that would never in a million years when I was that age have crossed my
Mhm.
mind that like that's how young, that's when you start, right? So yeah.
Yeah, exactly. So we have you, Shauna, and not ChatGPT or AI. So this is actually a perfect segue into our last question, which is, what other tax questions should we be asking right now? What are we
Oh, I
missing?
love it. What other tax question should we be asking right now? The most important one, if you're the taxpayer, if you're the person, the most important one is to go to your team and say, listen, on the aggression scale, and I know it was covered, but I got to cover it quickly, right? The aggression scale, 0 to 10, 0 meaning the IRS never calls me never ever, right? 10, we're all going to jail. Where do I sit as a taxpayer? Right. So orange and red don't go well together. Right. So we're not doing the 10. 9 is Al Capone doing shady stuff, hoping you don't get caught. So we're not doing that either. Okay. We're doing like an 8. Right. Like they can come, they can audit. I've got the documentation. We're good. Okay. If you are an 8, but your CPA is a -4, you need to find a new team. Period. And it applies to every industry. It applies to your financial advisor, right? If you are, we generally think of closer to retirement as much more risk averse, but maybe not. Maybe they want to go gamble in the market, like whatever. You have to ask your team, what are you? What are they? And are you at least close enough? If you're a 7 and they're a 5 and they're willing to learn about things, great, fantastic. That's fabulous. But if your team doesn't match you, your team won't even bring up to you what are the other questions? What are the other things we should consider in whatever the field is?
Yeah.
Great advice. Yeah.
Yeah.
That good fit,
Love that.
right? That's part of being a good fit.
Always. Yeah.
Yeah. All right. Awesome. Well, this was great. The time always flies with you, Shauna.
Yeah, I know. It goes
Aw.
by so quickly.
So fast.
Sweet. I love it.
So fast. You'll have to be like a regular, like a once a year, guest spotlight to talk tax, nerding out taxes with us.
I'm in.
Awesome. But we always love, so last time we had you on, we asked you the question that we ask all our guests, which is, what does living richly mean to you? So today we're going to switch it up a little bit, and we want to hear a closing thought. So can you share a closing thought with our audience, our viewers, anything you've been thinking or advice or, just anything interesting you want to share?
I have been thinking it, and it also comes from a tax perspective. So, putting yourself into stress is never worth it. Peace and happiness are keys in life. My 2 cents. Okay.
Mm-hmm.
So I have seen people stress and work and cry and fight and do all these things to try to get down to a 1%. If you're at 5 and you're in peace and happiness and you can sleep at night, do that. Right.
Mm-hmm.
In my opinion, money is not the be all end all. It's what you can do with the money. And so if we've taken you from 37 to our average 6.92 and you're happy with that and you get to go do whatever it is you want to do with your money, peace, happiness, sleep, eat some Christmas cookies. Come on. Chill. Right. So
yeah, I love that. All right, Atricia, you're up.
All right. Mine is I can't credit the person who actually said this. It's a quote. I can't remember who said it, but
it was me. It's fine.
You're always saying the most insightful thing, enlightening things to me.
Just go ahead.
So we'll credit it to Anne. But we get closer to the end of the year. And I think I talked a little bit about this last year, but year end never feels like the restart for me. Like and maybe it's because it's a busy time in our business, but I never feel like there's this sort of like slowing down reset at the end of the year. But I read this quote and they said that the end of the year is not the end, but a going on, right? Like it just goes on. And that was for whatever reason, it triggered something in me. Like there's no life-changing moment that happens when a new year starts, right? Or when the end of the year happens. It's just this going on. And I think maybe resetting my focus. I mean, I already adopted last year that spring equinox was going to actually be my New Year celebration every year, because that's usually when I'm starting to feel like things are changing and resetting. But yeah, so I just thought it was a really insightful thing, right? So we get to the end of the year, we want to make all of these resolutions, we want to make all these changes, and they're great to do, right? To set goals. But just remember that the end of the year is not the end. It's just a going on, which I really liked. And we'll credit it to Anne. I'll figure out who's it later.
Also, because you're a December birthday, I feel like a little bit of the end of your year is like, a little bit earlier than the end of the rest of our years. Cause I know that's always a time for like reflection. And
I get super reflective around my birthday.
You do. I can attest.
Like, what am I doing with my life?
You're being fabulous. What are you worried about? Like,
Thank you, Shauna. Thank you. I say that and she's like, yeah. All right. So my closing thought, actually, Shauna, this is inspired by you. My closing thought is all about leverage. And what I mean by that is leveraging people, tools, things you can delegate around you so that you are not necessarily carrying the weight of all the things on your shoulders, but that you are really focusing your time and efforts on the biggest value that you provide to your business, to your family, fill in the blank. And also that you have space in your life to do the things that bring you joy, right? Which, like, Atricia and I talk about this all the time. For us is not cleaning our house. Like, that does not bring us joy. So we delegate that
I hate dishes.
responsibility. Yeah.
These nails don't work for dishes.
No.
Not good for our nails. Yeah,
No.
exactly. But Shauna, in the, short period of time that we've known you, even just communicating with your team, like, we can tell that you are just an expert at, like, staying in your lane, knowing what you are uniquely valuable, and uniquely experienced to do and to provide to your clients. And you are so good at leveraging your team, delegating, like, leaving them to do what they're best at. And so I just think that that's a really great reminder for all of us. And whether you're running a tax strategy firm like Shauna is, or you're running a financial advisory firm like we are, or you're not, like, I think all of us can take something from that and implement it in our lives. So thank you for inspiring us in that way.
Oh, thank you. I'm thrilled. Well, as soon as we can all get the robots that Amazon or whatever is going to produce to do the dishes, then we've all delegated and everybody's happy. So yay.
Yes,
For sure.
exactly. Exactly. So, Shauna, before we let you hop, remind all of our listeners how they can find you, how they can find out more information. I know you have an awesome book that people can also purchase on Amazon. So just share a little bit about where people can find you.
Absolutely. So pretty easy to find, taxgoddess.com. Let's see, the book on Amazon, getting there, is the 6% Life. This is the most recent book. So this guy beat out Think and Grow Rich for 3 weeks on the bestseller list, which is pretty cool. So yeah, it's pretty cool. Thank you. Yeah, 7 legal loopholes that any business owner can use, along with the pitfalls, all the things you have to watch, the documentation, all the things. So yeah. Thank you. That's so kind of you. But yeah, taxgoddess.com, easy to find us. And if you're just looking to kind of nose around, poke around, we do have a YouTube channel. So we try same thing, big on education. I'd much rather that instead of you guys watching the finance bro talk about the yacht or whatever, like, watch me talk about a yacht. I'll tell you exactly how to do it. So
how to do
I'm
it,
in.
how to do it in the right
Exactly.
How to do it and not go to jail. That's the
Yes,
key.
we love it.
Yeah, exactly. All right, Shauna. Well, thank you again so much for joining us. We'll see you again in 2026. Yeah. And thank you all for tuning in to another episode. We will see you all again next Tuesday. And until then,
live richly.
Thanks again for tuning in. If you enjoyed today's episode, please be sure to subscribe and share it with someone who might benefit from it. Friendly reminder that this is for informational purposes only. For additional information, please visit us at www.curoprivatewealth.com. Until next time, live richly.